Okay, so the greater work here is to be able to identify the items that affect. Emphasis is on the word affect. Okay, if the item affects the debtor's balance, then it is worthy to be put in the debtor's control account. The effect we are looking at here is either it is increasing the balance or decreasing the balance. Okay, so as we go through these items, you should be able to determine whether a particular transaction increases debtor's balance or decreases debtor's balance. Now, the first thing I think I need to draw your attention to is the opening balance, because you may have some debtors from the previous year you are bringing to the next year, right? So that will be recorded as well. So opening balances, and you find your opening balances in the journal. Okay. When I say the journal, I'm referring to the general journal. Okay, but let's pick the first item, credit sales. So dear professors, I want us to analyze what is credit sales. It simply means you have sold, the business has sold goods to the customers and the customers didn't pay, right? So is this going to increase debtors balance or decrease debtors balance? I think the obvious answer is it is going to increase the debtors balance, because the more you sell to them on credit, the more they owe the business, the more their balances go up. Example, if Prof. Sandra sells shoes to Mr. Amwa, okay, on credit, say 200 cedis, then Mr. Amwa is going to owe Prof. Sandra 200 cedis, right? So the debt with Mr. Amwa, the customer, is increasing. If she sells more to me on credit, the debt is going to increase. So credit sales would increase the debtors balance. Now the second one, dishonored check. I want my professors to share their opinion here. Dishonored check, what is it? And would it affect debtors positively or negatively?
So could you please repeat what you said? I didn't hear.
Dishonored check. Do you want me to repeat the credit sales or the dishonored check?
Dishonored wages.
Okay, the dishonored check. Yeah, so I want you to share your opinion. Dishonored check, what does it mean? Dishonored check. Any clue as to what it means? Okay, so let me assist us in the dishonored check simply means that your debtors, issued a check to you, but when you went to the bank for the payment to be done, the bank refused to pay because there are issues with the check. So a dishonored check simply means a check that a bank refuses to pay due to errors or mistakes on the check or insufficient balance in the account. Okay, so I've just listed 3 reasons why a check may be dishonored. Imagine if I give you a check of 2,000 cedis, you go to the bank to withdraw, and I only have 50 cedis in my account. The bank cannot pay, so such a check will be dishonored. So a dishonored check is a check that the bank has refused to pay because of certain issues. And one of them is insufficient balance. The other one is wrong date. Imagine we are in 2024 and then you quote a date like 1974 and you take it to the bank will not pay, right? I think checks have an expiry of 6 months. After 6 months, if you take a check to a bank and the date has expired for 6 months, it will not be honored. Okay, so wrong date is also one. And then if the amount in words, if you take a checkbook, you know that there's a section for the amount in words and there's a section for the amount in figures. If the two disagree, the bank will not pay. Imagine you write 100 cedis in words but in figures you write 200, the bank will not pay. And then the signature, if the signature on the check is false, the bank will not pay. Okay, so these are some of the reasons why a check will be dishonest. So let's analyze. If your debtors give you a check that the bank refuses to pay, what does it do? Does it increase the balance or reduce their balance?
So could you please repeat what you said?
Okay, so I'm saying, for example, I'm your debtor, so I owe you 200 cedis. I give you a check of 200 cedis, which means I've settled my debt, so it comes to 0. You go to the bank and the bank does not pay because I don't have enough amount in my bank account. So the check will be dishonored. The question I'm asking is, will this increase the debt I'm owing you, or it will reduce it further?
I think it will increase.
Okay, so yeah, exactly. It is going to increase the debt from 0 back to 200. In a way, it is going to restore the debt, and the restoration is oh, in fact, the English is not coming this one. The restoration is as a result of an increase, right? Because I owe you 200, I give you a check of 200, so the debt goes to 0 because you feel I've paid. You go to the bank does not honor the check. The debt will be restored back to 200. So in a way to increase from 0 back to 200. So dishonored check would increase or restore the debt, if we should put it in that way. Let's look at the next one, interest on overdue debt. So I think the meaning is in the words. Our debtors or the debtors of the business have not paid and their debt is overdue. So we are charging interest on overdue debt. Then what is that going to do? Is it going to increase the balance or decrease it? I think my professors are processing.
Increase.
It is going to increase it, exactly. Thank you very much. Okay, so let me quickly run through the other items. The next one is cash refund to debtors. If you refund money to somebody who is owing you, in a way, I'm owing you 200 cedis, you give me additional 100 cash, and then I'm going to owe you more, right? So refund to debtors in a way is going to technically increase the debtors balance. The next one, cash or check received from debt. I think this one you would do the analysis for me. When you receive cash from debtors or check from debtors, does it increase the balance or it reduces the balance?
So pardon?
Reduces the balance.
Okay, so that is perfect. It is going to reduce the balance. Discount allowed. You are giving your debtors allowance, so it's going to decrease their balance. Returning was. So I buy shoes worth 200 from you, so I owe you 200 cedis. Okay, and then I return back some of the shoes to you. That will mean that my debt is also going to decrease. So returning was will decrease the debtor's balance. Bad debt written off. When you write off bad debt written off means you are canceling the debt. So cancellation means a reduction. Bills receivable. Now, this is a negotiable instrument, okay, that is acceptable as a means of exchange or as a medium of exchange. Okay, bills receivable. I don't know if business management you've maybe you are yet to. There's something called negotiable instrument. We don't do business only with cash. Okay, sometimes we can use some documentations backed by law to transact business, and one of them is this bill receivable. I think you look at this promissory note, bill of exchange, and the business management, so you'd appreciate better. Okay, so bills receivable means that, in fact, it's a form of money, if I should say. So when you receive that from your debtors, it means they have made payment, right? Just that payment is not in cash. Okay. So bills receivable is also going to decrease your debtors balance. Treat it as cash or check received. Okay. Now, contra or set off. Let me explain this. When you see set off, so Prof. Sandra owes Prof. Alexia, and Prof. Alexia also owes Prof. Sandra. Okay, so when it becomes necessary, both of them will agree that, okay, you owe me, I owe you, let's set it off, let's cancel each other. So that's the meaning of set off. So a debtor may be a creditor. Imagine if I'm a cassava farmer and I supply cassava to a chopper. So I'm a supplier or a creditor to that chopper. If I go there and I go and eat, I become a customer. If I don't pay, I become a debtor. So sometimes in dealing with business, I say, okay, I supplied you 20 cedis worth cassava last week. I've also come to eat food worth 20 cedis. So cancel it, set it off. I'm sure you do some of these things home. Your junior brother owes you, you also owe him. And then you say, okay, last week you were owing me, this week I owe you, so let's cancel it. So that's set off, right? When a debtor is also a creditor, and for that matter, uses the balance to cancel each other. Okay, then the last bit is transfers. Sometimes you can transfer some balances from your debtors account to the creditors account, all in line with some of these set off I just spoke about. Okay, now, dear professors, if you get familiar with these items, then the preparation of the account is very simple, because you only need to debit and credit these items into the account. But how do you know whether to put this at the debit side or the credit side? So among the things that we have listed here, this is the principle I'm giving you, and please note it somewhere. For your debtors account, okay, any item that increases debtors balance, you debit it. Let me put that on the screen here so that my professors. Now, we all know debtors have a debit balance, right? That is their normal balance, even though sometimes they can assume a credit balance, but normally debtors have a debit balance. So we are saying that any item that increases the balance is debited to the account, and any item that decreases the balance is credited. So please, this tip should be at the back of your head every day, every time. Debtors have a debit balance, so any item that increases it, you debit. Any item that decreases it, you credit. The same will be for your creditors account, even though we are yet to go to the items to prepare the creditors account. Creditors have a credit balance. Okay, so any item that increases the balance is credited. Okay. And any item that decreases the balance is debited. As simple as that. So you always need to remember this principle. So now let's go back to the note and see how it rolls out. So look at the items we discussed. We all agreed that credit sales increases debtors balance. Prof. Frank, I think you would fall on the recorded video when I share later. But we are trying to prepare this to control account, okay? And we say a control account is account that is prepared to summarize a ledger. The ledgers we are focusing on is the sales ledger and the purchases ledger. The sales ledger, as you know, keeps debtors account. So it's like the debtors control account is going to summarize all the information about our debtors. And some of the information of our debtors are what we have here: credit sales, bad debt, discount allowed, all those things that affect debtors by way of increasing their balance or decreasing their balance. Okay. So the point I just made is that if the item increases the debtor's balance, you debit it. And if it decreases it, you credit it. So the first one, credit sale, we have agreed or we have established that when you sell to customers on credit, then they become debtors. So it increases the balance on debtors, right? The more you sell on credit, the more you get debtors, right? So credit sales increase debtors balance. That's why it is debited to the debtors or sales ledger control account. Okay. I think we spoke about the designer check too, and we saw it restores or increases the debt back to its original state. So it is debited. When you charge interest, somebody is owing you and you are charging the person interest, then the debt will increase. So that one will also be debited. If you look at the credit side, you have things like discount allowed. If you allow your customers discount, it decreases how much they owe you. Return invoice will decrease. Bad debt written off, when you cancel the debt because they cannot pay, it is going to decrease. Okay, so this is the format for the sales ledger control account, but like I've indicated to you, you need to pick the item, analyze whether it increases the balance or decreases the balance so that you debit or credit appropriately, right? Now, in the case of the creditors, these are items that affect creditors, okay? You have your credit purchases, your return outwards, your discount received, okay? So I think that I need to give you this note so that you familiarize yourself with the items that affect your debtors and your creditors. And then you do the analysis to know whether it increases or decreases the balance. And then I'm sure you'll be able to do the debits and credits into these two accounts. Okay, let me pause at this point and ask if there are any questions. Okay, if there are no questions, I'll end by going on these notes. Now, note number 1, cash sales, provisions, okay, provision for bad debt, provision for discount allowed, carriage outwards, carriage inwards, etc. These things do not affect control account. And let me explain why. If you sell goods to your customers and they pay cash, how does it affect debt? They have paid you, so there's nothing like. So when you sell and you take your money instantly, the issue about debtors do not even come to play for you to even analyze whether it increases or decreases their balance. So cash sales and cash purchases, they do not affect these two control accounts. So if you see them in a question, you ignore them. Likewise, all the provisions, okay, all the provisions do not affect the exact balance on debtors or creditors. Carriage inwards, carriage outwards, same. So when you see these items, you just ignore them in the question, okay? Any questions for me before maybe we'll look at some illustrations, or maybe I'll pause here, give you the notes and the audio, the video for you to go through and take your time. Note down some of the issues you have, I think we'll deal more about the transfers in our next session. Okay. So any question, or you want me to clarify something, please prompt me.
No, thanks.
Okay. I think that was from Prof. Alexia, Prof. Sandra, and Prof. Frank. Are you okay?
Yes, please.
Okay. Okay. So I think what we are left to do now is to solve illustrations, right? But today, do I want to solve illustrations? I'm not too sure about that, especially pending my solutions from Prof. Alexia and Prof. Frank. So my two professors, Prof. Sandra has already done it. So Prof. Sandra, I'm going to give you an exercise to try for me. The past question has a question on control account. I want you to just do something. I just want to see how you struggle. I love it when students struggle. But let me open the question here. I think I have it here. Let me open and then we'll go to that control account. And maybe I'll guide you so you can do it. Same applies to Prof. Frank and Prof. Alexa, but I'm not requiring the two of them to submit. It's only Prof. Sandra I want to see a submission because she has finished the first one. Okay, so this was a question on the control account. So normally they will give you the items and all that you have to do is to open the account, pick the item, debit it or credit it, depending on the analysis you make as to whether it increases the balance or reduces the balance. So Prof. Sandra, I know you not get all. I just want to see if you can get few items debited and credited correctly in these two types of control accounts. Prof. Sandra, let me hear a comment. Is it okay for you?
Say, I don't even know where I'm going to start.
So I'm assisting you to know where to start. Just open the first account, which is the debtors account. Okay, the debtors control account. But here is being referred to as a sales ledger control account. Okay. And then remember, I said when you pick an item, you ask yourself, is this item increasing the debtors balance or decreasing it? If it is increasing it, you debit. If it is decreasing it, you credit. If you go to the creditors, you pick the item and ask yourself, will this item increase creditors balance or decrease it? If it decreases it, you debit. If it increases it, you credit. Okay. So I'm expecting you to do something like you open the account and you pick the first item. The first item is debtors 1st December 2020. I think that is an opening balance, right? So that you can record the opening balance on your debtors. You can also record the opening balance on your creditors. Then look at the next item, cash sales. I think we just had the discussion on cash sales, so you know what to do. Cash purchases as well, you know what to do. Goods returned to suppliers. I think that is return outwards. And then goods returned from debtors, that's return inwards. Then you have discount allowed, discount received, you have bad debts, you have payment to creditors, and then you have check received from debtors. I think you can try something. I just want to worry you this morning, okay? Just present something. Take it as a project work. Let me get some positive feedback from you.
So I'll try.
Exactly, that's what I want to hear. And when you come down, you see the set-off I spoke about, the interest charge on overdue debts. Okay. So Prof. Alexia and Prof. Frank, please, you need to complete that WASI question on the TPL for me. If you can finish on time, then maybe. Yeah, I think somebody was saying something.
So please, I said yes, please.
Okay. If you can complete that on time, then we'll rejoin the third session and solve that question together. So we wrap up on TPL and balance sheet. But if not, then maybe would zoom that into tomorrow's class. Okay, so professors, I think I'll end here. In fact, I'm also ending early because I need to attend to something. Okay, so deal with this work for me. I'll try and share the videos on the control account today, especially for Frank to review, so that tomorrow we'll be on the same page when we start solving the illustrations. Okay, so
Yes, someone.
yes, Prof. Alessia.
Someone.
I'm listening.
Someone.
I can hear you. Go ahead.
Hello, sir.
Hello, Prof.
Please, I was asking, when are we supposed to submit?
Oh, you should do that within the remaining time. I think you have from now to, you have about 30 minutes.
So please, when are we supposed to submit it?
In fact, before 11:30.
Okay.
Prof. Frank, are you with us? Before 11:30, I should have your submission. Okay, I think microphone, and today your network has been very terrible. Sorry for that. Okay, I apologize on behalf of your communication network. But please, if you are solving and you are meeting problems, don't stop. Oh, fix the problem. If you can't fix it, skip it, do the others and send. I want to see how you deal with it. And no copy. I beg you. I trust you before you don't do copy. So that is that. Thank you very much for today's class. I think I'll see you when I see you. But I'm expecting submission from Prof. Alessia, Prof. Frank on the TPL and balance sheet, and Prof. Sandra. Let me see how you struggle with the control account as well. So by 11:30, I'll be anticipating your responses. Okay. Have a nice day, professors, and take care of yourselves. Bye-bye.